The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
TGIF, everyone. Welcome to another edition of Breakout Investing on TFNN, now 5 days a week from 3 to 4 Eastern. Thanks very much for tuning in. Give me a call. Let's talk about this market. You can do that by calling 877-927-6648. I always say if you can't listen to the show live, no worries. You can always get it as a podcast over on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. So if you're out and around, taking a walk, taking a run, just plug those earbuds in, open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. If you want to look at charts right along with me on the show today, you can do that on Tiger TV. Tiger TV is also viewable on your handheld device, but if you're at your PC, the show is carried live on Channel 1, and it is archived on Channel 13. Okay, options expiration Friday. Not surprising to see volume on the New York Stock Exchange and NASDAQ tracking higher than what we saw Thursday. Yesterday on the NYSE, volume was pretty much average at 674 million shares. NASDAQ volume on Thursday just a hair above average at 1.78 billion. So we will see volume come in higher on both exchanges today. Checking in on the NASDAQ Composite after hitting an intraday high today of 31.96. It's down near its session low, trying to stay positive here, up 7 points, 0.2% to 31.82, almost 31.83. So down near its session low, and the S&P 500, after early strength, has also faded a little bit. It is up almost 2 points to 1462. We'll check in on the Dow as well here. And we'll see the Dow is very close to its session low, now only up 10 points to 13,607. Stocks got a lift early following the heels of overseas markets. European stocks did pretty well today on growing speculation that Spain might soon ask for a bailout. So we'll see what happens there next week. Let's take a look at shares of Apple today. Apple in the news because the company started selling its iPhone in Asia today, with several mobile carriers in the area reporting record demand. So strong demand for Apple's iPhone. Apple still having a pretty good day today, trading in a super tight range here, up $3.55 to 702.25. So decent day for Apple. Let's check in on shares of Google. Google is an example of an extended stock. I mentioned Google yesterday. It has just done nothing but go up since really the market confirmed a new uptrend back in late July. Google was one of the first stocks out of the gate. It is up another $4.88 today, almost 0.7% to 733. Let's check a weekly chart for Google, and just want to show you here that the last breakout area for Google was when it cleared 658.59. Okay, so here you're looking at a stock that is working on 10 straight weekly price gains. So this is not a stock I'm not going to touch after 10 straight weekly price gains. When a stock makes a move like this and it starts to pull back in price, right now a resting area to me looks like it could be this 10-week moving average here at 672. 672. So that would be, from 733, that sounds like a pretty sharp decline, but Google could come down to that 672 level, find support and bounce off that area of support there. So be fortunate if we were able to pick up shares at that 672 price level. I know right now at 733, I do not want to touch it because it is extended. Shares of Intuitive Surgical also in the NASDAQ 100 today, catching a bid. This is still a broken stock in my view. I don't think that Intuitive Surgical really has a good chance to be a meaningful market leader at this point. It is still deep inside a base here. It is up $10.52 today, a little over 2% to $516.86. So it's trying to come back to life here. It has made a pretty nice move over the past 6 trading sessions, but whether or not this stock can be a leader again is very much in question right now. So not a big fan of Intuitive Surgical as it still sits deep inside its base here. Also, let's check in on another large cap tech that is also extended, but hanging in there pretty well. Shares of Amazon under quite a bit of pressure today. I mean, quite a bit of pressure. That's a relative term, but it is down $3.16, 1.2% to $257.65. Of course, the news yesterday that really didn't affect the stock that much was that Walmart was following Target's lead. It is no longer going to carry Amazon's Kindle tablet computer and the Kindle e-reader. So, but again, Amazon was pretty much unfazed on that news yesterday. A little bit of selling pressure in the stock today, though. Again, down a little more than $3 to $257.65. Taking a look at some earnings reports after the close Thursday, we heard from Oracle. Oracle had been acting very well ahead of earnings. It was actually down for 3 straight sessions headed into today. Oracle was doing well for a while here, but the broad market has come in a little bit. Again, indices are off their highs, and that has dragged Oracle down a little bit. Stock is still up 1.2% to $32.65 on really lukewarm earnings, and from what I could tell, earnings were up 10% from a year ago to 53 cents a share. That was in line with estimates. Sales growth pretty disappointing. It actually fell 2% from the year-ago quarter to $8.2 billion. The estimate was for sales of $8.4 billion. So software sales still doing okay at Oracle. It actually offset sluggish hardware sales. So software is still doing okay as Oracle continues its push to be a bigger player in cloud computing. Of course, a space that is really dominated by Salesforce right now. Let's take a look at shares of Salesforce, which has been doing well recently. It's been under a little selling pressure, but it is down 27 cents today, not much at all, to $155.75. Also in the software space, we can take a look at shares of Tibco. Tibco also reported earnings last night, similar to Oracle, though. It has given back a lot of its early gains. Shares were recently trading around $30.29, up 43 cents, but well off its intraday high of $31.57. So earnings at Tibco were up 17% to 27 cents a share, in line with estimates. Sales were up 11% to $255 million. The consensus estimate was for $259.8 million, so a little bit below the revenue estimate there. Last check, shares of Darden Restaurants making a nice move today. Darden, not big gap up in price, also trading near its session low now after early strength. Still up 4.2% to $57.01. Of course, Darden Restaurants operates a couple of struggling chains right now, Olive Garden and Red Lobster. Company is getting ready to overhaul the menus and its marketing strategy for both restaurants. Darden also declared a quarterly dividend of 50 cents a share. That's going to be payable on November 1st to shareholders of record on October 10th. So earnings at Darden up 9% to 85 cents a share. Sales up 5% to just over $2 billion. So nice gap up, good demand for shares of Darden Restaurants today. And how about these home builders? You know, they continue to move here. I wrote a piece over at Benzinga.com earlier today about the home builders. They've just made spectacular runs, and they are moving again today in spades. KB Home reported earnings before the open. The stock is up 16.6% to 15.29, trading up near its session high. Listen, this is an industry group that remains under accumulation. What I've been talking about, though, is the fact that if you're not in these stocks yet, they are risky buys up at current levels. On the one hand, you always want to look at stocks that are being accumulated by institutions and fund managers. That's generally smart practice, but you also want to be careful not to chase. And I think by and large, there's a lot of chasing going on in the home builders right now. Now, I think I have a weekly chart here for KB Home. And we'll see. Relatively speaking, KB Home was actually one of the laggard stocks in the group. Of course, it has been rallying lately along with other home builders, but other names like Pulte, Pulte Group, Ryland, Lennar, a lot of these stocks broke out from bases some time ago. You can see KB Home here on the weekly chart just recently is breaking out over this swing point of around 13, but again, for the week now, it's up about 12%, but KB Home is looking pretty strong here. They were expected to lose 16 cents a share. They actually earned a profit of 4 cents a share. That reversed a year ago loss of 8 cents. Sales were up 16% to $424.5 million. Gross margin improved to 17.5% from 16.9%. New home deliveries in the quarter rose 7% to 1,720 homes, and the average selling price for KB Homes rose 8% to $245,100. So home builders moving in spades today. Take a look at the ITB. This is the iShares Dow Jones U.S. Home Construction Index Fund. Continues to move higher after an initial breakout here over 16. This was a breakout that happened back in late June. It moved sideways again, formed a little base on base pattern, broke out over 17 and a quarter, 1750. Now it's up around 2067. So probably needs to pause and digest gains, consolidate gains for a bit. I've just if you don't own the home builders now, I'd be very careful about chasing up here. Taking a look at crude oil today, up 0.5% to 92.89 a barrel. I think I read for the week crude oil lost about 6%, so a rough week for crude oil. Didn't get a final close on gold, but late in the session it was trading around $1,780 an ounce, up $9.80. Let's check in on the TLT here. iShares Barclays 20-plus year Treasury bond fund. It after 4 straight days of gains, it is only down about 9 ticks here to 121.32. So bonds looks like their 4-session winning streak could be in jeopardy today. When we come back, we'll take a look at the yield on that 10-year note, the 30-year note, see what the dollar's up to. Then we'll talk about some stocks, as we always do on Breakout Investing. We will do that when we come back. Happy Friday, everyone. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing, 877-927-6648. We're going to head out to Raleigh, North Carolina, talk to Mike. Happy Friday. Mike, how are you today?
Hey, Ken, I'm doing fine. How are yourself?
I'm doing fine. Thanks very much.
Yeah, just wanted to, a week or two ago, you talked about a stock on Tom's show, Guidewire Software, GWRE, and I bought that last week. It looked like it was kind of forming a little handle as it was churning its way upward on the right side of a base, and wanted to get your take on that. What do you think of its price and volume pattern here?
Not too bad. Guidewire is a company that came public earlier this year, I believe in late January, at $13 a share. It is trading around $31 right now, so it's been a pretty solid performer in the IPO space. And its price and volume trends still look pretty decent. It's a small cap, market cap of a little over $1 billion, average daily volume of about 500,000 shares. Let's see, 2012 they made 50 cents a share. They're supposed to earn 27 cents this year, but then it's supposed to ramp back up in 2014 to 40 cents a share. So, technically it looks good. You've got a new swing point at 33.15. If this market keeps working here, we keep getting money coming in from the sidelines, it seems to be setting up for a move over that 33.15 swing point, which is the high it made when it gapped up back earlier this month on September 5th.
Right. Yeah.
So
the valuation doesn't bother you. It looks like I think a PE is around 120, I believe.
It's a high multiple stock. It is an issue, and I think there's probably. Let me just check the short position here. Wouldn't be surprised to see relative short position's not Not too bad. It's got a days to cover ratio of about 3.6, which isn't actually too bad. But, Mike, you probably know me. I'm not averse to buying high multiple stocks. It's getting a high valuation, I think, because they're currently in their fiscal 2013 year right now. So in fiscal 2014, those annual earnings are supposed to ramp up and grow about 48% from fiscal 2013. And the company has been delivering pretty nice top-line growth in recent quarters. Second quarter, it was up 33% to $67.6 million. So I can see why it's getting a high multiple. Technically, it looks pretty good. So I'd give it a decent thumbs up still. I think a move over 33.15, could happen.
All right, cool. Thanks. Hey, you have time for one more real quick?
Sure thing.
Tile Shop Holdings, TTS. I don't know what went on with this one, but I bought into it about $12.50 just about a week ago, and it's really showing significant signs of life here.
Gee, nay. Yeah, I would say so. Another. So let's see. Now, is this an IPO? I'm not really familiar with the company. I know it's pretty. Go ahead.
It's a small cap, and they're a retailer, and that's why I bought into it. They actually have a store right here in Raleigh, North Carolina, where I bought some tiling supplies for my kitchen, and I was like, hey, it looked like a private equity firm bought them, possibly, or they got some financing somewhere, or something happened but it's not an IPO.
Yeah.
It's been trading for a while, but about in early August, it showed a huge jump from almost, like I think $9 up to 14, and that's where it is now. But it's I don't know.
I'm actually not familiar with it. I'm kind of looking at it for the first time. I see a very limited trading history, and again, I don't know if it was a private equity firm just brought it public recently, but I only see about maybe a month or two worth of trading. But so I can't really. I don't know much about it. I can't really, because it's got a pretty small trading history. I can't really look at the chart and say, well, it's poised to move higher. But I can see back over the past few quarters, they've been growing sales pretty decently. And I just can't give you too much analysis on it, unfortunately.
Okay, yeah, I bought it based on the old Peter Lynch philosophy of buy what you know, and they have outstanding customer service, really knowledgeable people there. So that was kind of the idea behind it.
And you're sitting on a profit on it, I guess, right?
Yeah, absolutely.
All right.
Yeah, a nice profit. But
it's working for you. That's the most important thing.
Yeah, and you might want to keep an eye on it yourself. Just when it allows another entry point.
I'm going to take a closer look, my friend. Thanks for the call.
All right. Yeah. Thank you. Have a good one.
All right. Thanks, Mike. All right, yeah, Tile Shop Holdings, TTS. I'll have to look into this and see what's going on here, because it has been showing pretty good relative price strength in recent weeks. No question about it. All right, thanks to Mike in Raleigh, North Carolina for that call. Headed into break number 2. Long break coming up, folks. Give me a call. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. I'd like to take a look at Tile Shop Holdings. Before we went to break, we were talking to Mike in Raleigh, North Carolina about TTS. Its first day of trading was on August 22nd, so it doesn't have much of a trading history, but it did merge its operations with a company called JWC Acquisition Corporation, which is a special purpose acquisition company, but in the end it has resulted in Tile Shop Holdings being a publicly traded company. So August 22nd, it started trading. It has been a really, really strong price performance. Still looks like it started trading around the $10 a share range. Quickly ran up to $13. Moved sideways here. If you're looking in Tiger TV, it moved sideways, traded right around that 13, a little bit underneath 13, and then broke out over 13 earlier this month. Today, it hit an intraday high of 1570 and was last trading at 1480, up 1.9%. So Tile Shop is a specialty retailer of natural stone tiles, also manufactured stone tiles. Interesting business here, and definitely on the speculative side, but definitely showing a lot of relative price strength since it started trading back in August. All right, checking, let's see, the U.S. dollar index recently trading around 79.35, down 6 ticks. Bonds not moving much either way. Yield on the 10-year note at 1.76%. The yield on the 30-year, 2.95%. Let's take a look at that TLT. And we'll see that it is now just up. Could try to make it 5 days in a row here for the TLT. It is now up 8 ticks to 121.49. So bonds trying to extend their winning streak to 5 sessions here, and we'll see how that plays out. All right, let's take a look at shares of Vivus, VVUS, VVUS. See, Vivus has been under pressure for most of the session here. It is down 12.8% today to $20.69. The company said a European drug regulator is unlikely to recommend marketing approval for its obesity drug. Is that Qsiva? I'm never sure the pronunciation there. But, yeah, Vivus has an obesity drug, unclear whether it's going to be approved by European regulators. That is weighing on shares today. Let's take a look also at Research in Motion. Research in Motion under a lot of selling pressure, working on 3 straight declines here. Starts to rally, falls apart again. It is down 5.9% today to $6.49. BlackBerry maker said that an outage earlier today only affected about 6% of its users. Research in Motion will be out with earnings next week, Thursday. After the close, a loss of 47 cents a share is expected, with sales down 40% to $2.5 billion. You'll remember that earlier this week, RIM signed a licensing deal with Microsoft that will allow RIM customers to store and transfer larger files more easily. Let's check in on shares of MasterCard. We heard from Joe in Boston yesterday about MasterCard. It was kind of a strange day of trading for the stock yesterday. It did try to break out over 456. There was good volume in the stock yesterday. The breakout kind of stalled. You can see that closed pretty much in the middle of its trading range. Today it's stalling once again, so it's kind of showing wishy-washy price action here. MasterCard still outperforming today, up $3.61, 0.8% to $457.79. So it is holding just barely above that 456 swing point. Remember, MasterCard yesterday warned of soft revenue in the second half of 2012. Earlier today, Citigroup raised its rating on the stock to buy. But again, it is showing kind of questionable price action here, just having a hard time getting going. Let's take a look at model portfolio holding Michael Kors. When I say model portfolio, I write the Ultimate Growth Stocks newsletter at TFNN. If you want to get 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just click on the Newsletters tab, then Investment Newsletters. You can read about how I approach the market. But good news for Kors, which has been a model portfolio holding for some time. Late Thursday, they did raise their earnings guidance. The stock is looks like it could try to take out a swing point here of 56.70. But late Thursday, Kors said it now sees earnings per share of 38 cents to 38 to 40 cents a share, with sales coming in between 510 and 520 million. This is for the current quarter. The consensus estimate was for a profit of 36 cents a share on sales of 493 million. So strong guidance from Kors. The stock is up 6.8% today to 56.04. Really, haven't made a secret about the fact that this one has the look of an emerging leader. Fundamentals are solid. The company is increasing market share. Its products are resonating with consumers, and it's a fundamental powerhouse. And no surprise to see the stock continue to show relative price strength. So good day for Michael Kors. I want to check in on shares of Facebook, because Facebook is starting to come back to life here. I am not convinced that it really is in the early stages of an uptrend here. The stock has been obliterated since it came public earlier this year at $38 a share. It's recently trading around $22.65. It's up 6 cents on the day today. Don't forget that Facebook does have a lot of share lockups set to hit the market. You remember in mid-August, there were about 271 million shares that came to market. There's still about 2 billion more shares that could be coming on the market. There's going to be a lockup expiration in late October, one in mid-November, one in mid-December, and then one out in May 2013. So still a lot of shares going to come to the market here. And, to Facebook's credit, it has been able to close above its 50-day moving average here for what looks like 3 days in a row here. But on Thursday, you can see it closed near its session low, and it is trading near its session low today. But Facebook, coming back to life here. And I have to say, when Mark Zuckerberg spoke, I think it was last week at that TechCrunch conference, he was pretty impressive. I think that he needs to get out there more and kind of articulate where the company is at, and kind of get Wall Street to restore faith in him, because he's a good speaker, smart guy. Still a lot of questions out there about if he is the right guy for the job. But Facebook, coming back to life here, at least a little bit. Let's check in on shares of Expedia today. Expedia having a pretty good day. It gapped up. It is up $2.25, 3.9% to $59.34. You got a nice little consolidation working here for Expedia. Let's check out the weekly chart. And this is an online travel firm, of course. Several opportunities to buy Expedia in recent months. It broke out just before the summer here. This was really the best time to buy it, when it broke out over 35.57. It ran up, formed another base right here, staged a powerful technical breakout over 50.66. Now it looks like it's getting into position for another breakout. But what you have here is just a series of technical breakouts. No doubt Expedia is a stock that is acting well. I just look at the chart and say, you know what? If I didn't get it at 35.57, and I had another opportunity to buy it when it broke out over 50.66, I'm not all that keen on buying a potential breakout here over 58.59. So this is one, if it's going to continue to go up, it can go up without me. There are plenty of opportunities out there in the market, especially right about now. So on the one hand, Expedia continues to act very, very well, but I'm not a big fan of its current consolidation, and plus the fact that it has already made a pretty significant price move already. But good day for Expedia. Let's take a look at Kayak. This is another online travel firm that offers services through kayak.com. Interesting move here over 33 today. This is a company that came public in July at $26 a share. Shares were recently trading around $33.55, up 2.4% today. Did clear some resistance over 33, so technically looking pretty strong here. This is an example of a first stage IPO base. It has a market cap of $1.3 billion, so it's a small cap stock. But Kayak looking interesting as well here. Kayak is, I don't believe, are they profitable yet? Yeah, they turned their first profit back in 2008, and earnings growth prospects look pretty good, and top line growth has been solid in recent quarters as well. So, good first stage IPO base setting up here. Definitely one worth keeping an eye on. Let's take a look at Blucora as well. Blucora. This company used to be known as InfoSpace. Another very strong price performer in the market here. BCOR is the ticker symbol. They turned their first profit last year in 2011. They made 33 cents a share. Full year earnings this year expected to come in at 64 cents a share. That would be up 94% from 2011. Next year, they're expected to earn $1, up 56%. So you've got big earnings growth prospects here. Still a fairly low multiple based on growth prospects, but excellent top-line growth in recent quarters. Another stock here, though, you had a big gap up. The stock broke out over $14 a share back here in late July. A lot of people don't like to buy stocks when they gap up like this, but look at that. If you had bought this gap up, you'd be sitting on a pretty decent profit here. So Blucora up 2.9% today to $17.94, off its intraday high of $18.43, but another name here that continues to show relative price strength. Mentioned the IPO of Trulia, TRLA, yesterday. Let's first check in on Zillow. Zillow's trying to break out here over 44. This is another breakout that's just having a hard time getting going. It's a yellow flag to me when the stock tries to break out in heavy volume, tries to clear a swing point. But, it's still technically intact here, but Zillow underperforming a little bit today, down almost 2% to 45.27. Again, still holding above that swing point of 44. Bright earnings growth prospects at Zillow. And Trulia had a great debut yesterday. Again, I mentioned yesterday on CNBC that Jim Cramer and David Faber were really asking tough questions to the CEO. They weren't really happy with the answers that they were getting. Anyway, but it was a good first day for Trulia. It priced at 17, closed yesterday at 24. It is down 66 cents today to 23.34. So, the chart looks kind of funny here because it's only been trading for 2 days, but Trulia, holding gains nicely today. Only down 66 cents after a big day yesterday. Another provider of online real estate services. Remember Five Below? I think it was last week that Five Below came out with earnings, and after some earnings volatility, boy, this one still looks really solid. Again, earnings were last week. They made 4 cents a share. That was a little bit above expectations, but it was flat from a year ago. Their revenues were up 40% to $86.8 million. Now, what you have here is a recent breakout over 33.97. Five Below is now trading at 35.81, but it could try to take out a recent high here, just over 36. So again, a stock with strong fundamentals that continues to show relative price strength. Five Below again operates stores selling merchandise priced at $5 or less, and they target the teen crowd. They have stores in about 17 states, still in the early stages of expansion. This is a very interesting retailer here, and I would not be surprised to see more mutual funds come into this stock. Again, some of the best opportunities in the market are some of these newer companies that are innovating, that are in the early stages of expansion, that are also growing earnings and sales nicely. And I think Five Below is one that's eventually going to fit into that category. So that's another name doing pretty well here. And we'll move on, take a look at some other names I'm watching here. Middleby, M-I-D-D. This is a food preparation equipment company. They make these big industrial ovens, among other things. Still acting very well after a huge move in early August here, holding gains nicely. Shares of Middleby up 40 cents today to 117.41. Let me check a weekly chart here for Middleby. There we go. And yeah, we'll see. You see this big weekly move here, strong volume, definitely a stock under accumulation. The fact that it's holding gains above its 10-week moving average, I think, is constructive. If the market does pull back from here, which I don't think anybody would be surprised to see that, I do think it would be a mild pullback, but you could see Middleby come down to that 111 price level. It's recently trading around 117.43, so that 111 level looks like pretty good support, but good fundamentals at Middleby. Some of its brands include Beach, Blodgett, Toastmaster, Turbo Chef, things like that. All right, folks, headed into the final break. Thanks very much for tuning in. We will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing as we head into the close, put the finishing touches on another week of trading. We'll see indices giving back early gains. Looks like a close near session lows. The Dow has turned negative here, down 16 points to 13,580. NASDAQ still holding on to a small gain, up a little more than 3 points to 3179, and the S&P 500 up fractionally to 1460. Overall, not a bad week of trading. Yeah, just wondering what the headlines are going to be in store next week. What is going to cause this market to, pull back? A lot of people out there are expecting a pullback. Certainly, we've come a long way in a short amount of time, and no one would be surprised to see a pullback at this point here. But why don't I go ahead and pull up a chart of the NASDAQ composite here, and we'll just for perspective, this is a chart of the NASDAQ with the 10-day, 20-day, and 50-day moving average. You can see the NASDAQ trading near its session low, still holding comfortably above its 10-day moving average at 31.55. Its 20-day is at 31.19, and the 50-day moving average all the way down at 30.32 right here. But considering the rally that the NASDAQ has seen since late July, a pullback down to 31.19 would would be perfectly acceptable and not surprising to see at all. I think a pullback down to the 30-32 level would be extreme. I'm just not sure that the headlines are going to be dire enough for that to happen, but who knows? We get word of soaring bond yields in Spain and Italy next week. The headlines in Europe have been mostly quiet, but the market always gets a little concerned when bond yields start to head higher over in Europe. We also have third quarter earnings season coming up at the end of the month, and then companies will be releasing earnings in the latter portion of October. We do have some earnings reports next week that not a busy week on the earnings docket, but let's take a look at shares of Lennar. Home builders have been on fire. Lennar is another extended name out here after a recent breakout. Well, you had a breakout over 30, and then you had another breakout over 32. Stock is up at 37.53 right now, up 2.5%. It reports earnings on Monday. Before the open, quarterly profit is expected to come in at 28 cents a share, up 155% from a year ago, with sales up 28% to $1.05 billion. So good growth expected at Lennar. Also, Red Hat, open source software, RHT on the New York Stock Exchange. They also report earnings on Monday. This is a stock. There's a swing point in its chart of 59.49. Tried to make a move over that swing point last week. It has been having a lot of trouble doing that, and you can see today it hit an intraday high of 58.42. It is now trading near its session low. A lot of stocks near their lows, just following the broad market here. So not surprising to see. Next week on Thursday, busy day of earnings. We've got Accenture, Nike, Micron Technology, and Research and Motion. Economic data. One more piece of housing data. Next week on Wednesday, we've got new home sales, and then Thursday, weekly jobless claims. We've got the third quarter to gross domestic product. That is for the third estimate to second quarter gross domestic product. So we'll see what that says. I think growth was 1.7% the last time around. So, yeah, fairly busy week next week. Coming up next, the Tom O'Brien Show. Hope you had a great, profitable week. Don't forget to check out a free trial to Ultimate Growth Stocks this weekend on the homepage of TFNN.com. I'll see you back here Monday, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great weekend.